You're now tuned into the Money Level Show.
Hey everyone, welcome to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies so that we can become financially free. So today we're going to go through a brief history of uranium and nuclear energy. This will be helpful for many people that are bullish on uranium as an investment asset, as well as those who are curious about the commodity itself. So for the sake of this video, I will have linked in the description the source that I got a lot of this from, but I wanted to make sure that I dumbed it down and simplified it for you all. So without further ado, let's get into it. From 1945 to 1969, this is the first era. Spanning from the mid-1940s to the late 1960s, governments focused on building up stocks of nuclear materials for weapons and energy. After the atomic bombings of Hiroshima and Nagasaki in 1945, nuclear energy for commercial use became important. The USSR and England established the first nuclear power stations in the mid-1950s. However, demand for commercial nuclear power remained low. There was also a persistent shortage of uranium during the Manhattan Project. Between 1945 and 1969, approximately 900 million pounds of uranium were mined globally, with the majority purchased by the U.S. Atomic Energy Commission. Some of it likely ended up in government stockpiles. Period 2, 1970 to 1983. During this period, from the early 1970s to the early 1980s, nuclear power gained popularity, with private companies buying nuclear materials. Nuclear power capacity grew significantly, and there was a speculative boom in uranium mining. Although nuclear power adoption increased, uranium production outpaced demand from reactors. As a result, commercial buyers built up excess uranium supplies. From 1970 to 1983, there was an excess of 450 million pounds of uranium, which went into commercial inventories. Prices reached their peak in 1982, but then began to decline. From 1983 to 2010, the third era, uranium mining reached its peak in 1982 and then gradually declined. Reactor demand exceeded mining supply in 1991, creating a deficit that lasted until the Fukushima incident in 2011. Unlike the Manhattan Project era, secondary sources of uranium filled the gap. Russia and the U.S. launched the Megatons for Megawatts program, converting nuclear warheads into reactor fuel. Recycling and enrichment tailing process became common in the UK and France. Secondary sources supplied a significant amount of uranium, along with commercial inventory destocking and reclassifying by the Department of Energy. All of this led to a decrease in uranium prices, which hit a low in 2000. By the mid-2000s, commercial uranium inventories had fallen substantially. The Russian disarmament program was set to expire, threatening secondary supplies. Uranium prices began to rise in 2003, tripling from $7 to $21 per pound by 2005. Commercial inventories fell by almost 70%, and utility buyers rushed to secure uranium. Spot prices reached a high in 2007, but dropped during the global financial crisis before recovering in 2010. By February 2011, uranium prices were around $70 per pound with reduced commercial inventories. The era of 2011 to 2020. In 2011, the Fukushima disaster in Japan caused a global shift in the uranium market. Japan shut down its nuclear reactors, and European demand, especially from Germany, had dropped significantly. Global reactor demand also decreased, leading to a surplus of uranium. Primary uranium supply increased for the first time in decades, mainly due to increased production in Kazakhstan. Secondary supplies from various sources continued to contribute to the market. Between 2011 and 2018, a surplus of 265 million pounds of uranium was added to commercial inventories, which reached 415 million pounds by 2018, covering reactor demand for 3 years. In 2017, concerns about oversupply prompted Cameco and Kazatomprom to curtail production, signaling the biggest beginning of a shift towards a deficit. From 2021 to the present, since 2021, the uranium market structural deficit has intensified. Reactor demand, which hit a low point in 2020, is expected to rebound. Europe and the US, after a decade of nuclear reactor decommissioning, reversed course due to the limitations of wind and solar energy. Russia's invasion of Ukraine in 2022 highlighted energy insecurity in Europe, making nuclear power more appealing. Primary uranium production remained low and secondary supply was limited, resulting in a deficit in 2021 and 2022. Financial buyers led by the Sprott Physical Uranium Trust also entered the market, locking up uranium supplies. This deficit continued, depleting commercial inventories accumulated after Fukushima. By the end of this year, commercial inventories are expected to be at 250 million pounds, covering less than 18 months of reactor demand. The last time inventories reached such levels, prices spiked to their all-time high of $145 per pound. Looking ahead to the end of the decade, global uranium markets are set to tighten. New reactors under construction will increase demand while primary production growth remains limited. The uranium market deficit is projected to grow, potentially exceeding 250 million pounds between 2023 and 2030. Completely depleting commercial stockpiles. Additional factors such as more reactor construction and increased financial buying could further tighten the market. Utilities are also under-contracted post-2025, and the market is poised for a sustained uranium bull market in uranium prices. Be sure to hit the subscribe button. I hope that this brief history of uranium was helpful for you to learn where we are in this cycle. I do believe that nuclear energy is the future, and I believe that the market is going to do well for the investors in uranium. So be sure to hit the subscribe button. Thank you all for tuning in. Y'all have a blessed day. Peace.